Hi, Andrew. Thanks for listening to me blather for a few
Yeah, how's it
minutes,
going, Dale?
buddy.
Thanks for having me on.
All right, great to have you, Andrew. What's top of mind for you? I was checking your stream out, and you talked about the massive candle that we put in Bitcoin. You think that's an important one? And what do you think of the market here in the middle of a new theater of war on planet Earth?
Yeah, there's so many things to unpack there. This is such a wild environment. I'm gonna go ahead and share my screen if that's all right.
Yes, of course.
Yes, let's go ahead and we will share. And yeah, here's what I'm looking at, like at a very high level. I think what's happening
Yeah,
is, if we just go to the equities first, the S&P
yeah,
500,
yeah.
basically, as you know, for the past 2 years, we've had this big inflation spike. And the market went through a pretty severe bear market, and it's been trying to climb out of that bear market. And for a while, things were going very well. We had declining inflation, and the CPI just kept printing new and new lows.
Yeah.
And we got that nice rebound in growth. We got that nice rebound, in the Magnificent Seven specifically. This right here
Yeah.
is a chart of that Magnificent Seven year to date versus the rest of the market. And you can see almost 10x the performance of the market from that Magnificent Seven. So it's been a very uneven rally that we've seen. But now I think,
Narrow,
yeah, go ahead.
narrow.
Very narrow rally. And, how long can that persist? I think the issue that we're now running into is we've had a balance in inflation where for the past 2 months, the year over year figures have been increasing. And what makes this a really tough situation is I'm looking at things like this Trueflation dashboard. This thing is a really good indicator for where those inflation reports are going to come in.
Cool. Free
And
site.
yep, this is a free site.
Okay, write it down, guys.
Yeah, Trueflation. This thing is really good. The CPI reports we're only getting once a month. This thing
Right.
updates every single day with a real-time feed.
Wow.
And so,
Good
yeah, you can,
find.
yeah, and look at this thing. It was up at 9%. And lo and behold, we've had this really nice dramatic fall. But you
Right.
can see we've been basing out for maybe the past 2 or 3 months. So overall, I would say this inflation picture is looking a lot better than where it was maybe like a year or two ago. But the problem now, right as it looked like we were about to ignite on this end of year rally, we're getting these geopolitical tensions. And, with those, if we suddenly get a spike in, let's go to like DBC, this is our commodities ETF.
Yeah.
We don't want to see commodities ripping to the upside like they are. This is not good. Same thing with crude oil as well. We're seeing that now ripping to the upside. So these are basically headwinds that I'm seeing for the rally. Everything looked really good, but unfortunately, it seems like we are now basically at the mercy of these developments that are happening in the Middle East. If those end up souring and we get a dislocation in the energy market, then suddenly our bond yields are moving higher again and equities are moving lower. So it's a challenging environment. This right here is our snippet of the yield curve. And you can see these are US Treasuries. And this gray line is where everything was 3 months ago. And then we have 1 month ago. And then this blue line is where things are as of the close yesterday. And this has been a really dramatic move. If you look at,
Sure
this
has.
20-year Treasury or even the 10-year, very dramatic in the past couple months.
Really, a full basis point.
Exactly. So yeah,
Yeah.
full, really big move higher. And for whatever reason, what I am noticing is the market is somehow hanging in there, even though we've had this big pop in yields. And even though we're getting these geopolitical tensions, things are still hanging in there. I mean, we look at these treasury futures, these things look absolutely horrible, and the equities are hanging in. So
That's
to your
what they
question,
did in '87. That's why I was saying that. You had, it's called disintermediation.
Yep.
So, and it took finally the market caving and the bonds came out of the hole like ripped the shorts faces out off.
Mm-hmm.
So that's what it would take. The only difference was we had a weak dollar into that.
Yep.
So rates were going up, weak dollar really wasn't supporting it. So we have the opposite, strong dollar. So I don't know if that's why you get a different result, but uh, just the differentials between yields and valuations are historic.
Oh yeah. Yeah, and you can see like this run the dollars had is just insane.
Yeah,
So yeah, and
12
this is
weeks up in a row.
mm-hmm.
Till last week, it gave a little up.
Yeah, so I think we need to see some relief on the inflation front. I mean, last week when we got those inflation prints, they came out super hot.
Yeah.
And, I thought, hey, maybe this is it. Bond yields are really going to go to the roof and equities might end up cratering, but things remain okay. So like what I've been using as my North Star is this chart right here. It's very, very simple, but check this out.
Oh, yeah,
This
I
very
saw that.
simple chart of the SPY ETF, which is the S&P 500.
Right.
We have some really nice clean levels to trade off of here. Back in April, and this was as we were coming out of that banking crisis,
Right.
we had this really nice 2-month
4,200
basing
breakout.
period. What was that?
42, 420 was where we had the breakout and we got parabolic. And 420
Exactly.
is what we've tested. Do you think that 420 is the low?
I believe it is the low.
Okay.
Yeah, so that's my baseline assumption. We have this really nice price structure here. And, we had many reasons to cascade below back in April, May, and June as well. And the market ended up having this beautiful breakout. But then as inflation resurged, we've gotten this pretty big corrective sequence. But it's very interesting. The market made its low pretty much right at the top of this 2-month basing period. So I like this structure here. And I'm pretty much using this as like my line in the sand. Hey, if we're above this wick from September 27th,
Yeah.
I'm being more constructive on equities. And if we were to fall below it and start cascading back into this base, it could certainly happen because we don't know what's going to happen in the Middle East. That's really what I'm watching out for. And that's how I'm approaching the market. Because I think with this Middle East conflict, like I've been reading up, the past week or so, like everyone else, but I'm not like killing myself trying to predict everything that's going to happen in the Middle East. And, I think that's kind of a fool's game. So I think it's just important, at least for me and my trading specifically, like, okay, things could get really bad or they could, go perfectly. So where are my lines in the sand and where would I get more or less constructive on the market? And right now I'm seeing like everything looks so bad, but we're just kind of building out this little sideways base up here.
Okay. So constructive the market. Do you think all new highs for the move, new all-time highs by year end? Are you in that camp?
No, I'm not in that camp. So for me,
Okay.
like the way that I'm seeing this is like we're already in October, we're in the late innings of this year.
Uh-huh.
And a lot of times there's this big seasonal correction that occurs in the fall. In the late fall, there's a lot of tax loss harvesting. And again, because most equities have been so darn weak this year and the breadth has been horrible, like I would imagine there's a lot of tax loss harvesting that's going on this year. But as we get to the end of October, a lot of investors, they just kind of go on vacation. A lot of them are out of the office, etc., holidays. And I just think that barring any big escalation, I think, market likely just kind of grinds higher into the end of the year. But
You know what? A lot of people are saying that. Okay.
Yeah.
Bar any escalation. Can you give me a reason why there won't be?
No, I can't. That's
all right. So, forget about saying barring. Start thinking about how you're going to protect yourself as things escalate.
Yeah.
And that's my view. Okay.
Yep.
Look, there hasn't been peace there in millennia. Okay. So you think Biden's going to fix it, or the Saudis, or the Syrians, or the Lebanese, or the Israelis are just going to lay down and say, okay, peace? I don't know, buddy. People say, as long as things don't get worse in the Middle East, how can't they? Please give me some hope.
Yeah, I mean,
Have any?
like I said earlier, I can't predict what's going to happen in the Middle East.
Right.
And I think there's a lot of emotions around what's going on. Like, it's pretty catastrophic, to be honest.
Exactly.
So for me, like, one thing that's actually been helping me with my trading is, like, for a lot of these big geopolitical events, I'll tune in and I'll start being glued to the screen and really like reading every news headline. I've noticed in the past, for me specifically, it's actually kind of like interfered with my trading a bit. So for this conflict, like, I'm basically going in saying, hey, my chance of predicting the outcome here is 0. I'm going to accept that I can't. And I'm keeping up to date on the headlines, the big events. I have my
Trade your
news wire up.
charts.
Yeah, but I'm just kind of looking at the charts.
Yeah.
So
Your hedge is your line in the sand. So,
exactly.
if it does get worse, you'll be out under 420.
Yeah,
Would
so
you would you get short if it took out 420?
to be honest, I don't think so. I think I would just
Okay.
get flat.
Okay,
I
that's
was,
good.
yeah,
That's a position too.
I was shorting the market up here, like towards the end of the summertime. I was getting really aggressive. Even the last time that we chatted, I was bringing up a lot of the risks in the market, some of our indicators that were flashing. So I think there was like a good short case to be made somewhere towards the end of the summer. Of course, then the market corrected. I certainly didn't catch all this move to the downside, but I caught a little piece towards the top, which was good. At these levels, like say in this little chop zone, I haven't been doing anything in this chop zone. So like, I haven't placed a trade maybe in the last like 5 days. I put on some positions this specific day right here on this wick low. I saw that, hey, the market's just cascading to new lows. The market was very weak intraday. And then we finally saw that buying pressure. So I put on a couple of pilot positions in this area right here. I went underwater on them for a few days, but I'm just kind of holding some positions that I put on right around here. And in this chop zone, I feel like, for maybe the past 5 days, it would be so hard for me to initiate, like, let's say like new shorts, and suddenly there's a good headline and boom, this thing's ripping to the upside. And then on the reverse, like if I'm putting on new longs and then, the headlines that we got yesterday with that hospital blow up, I wouldn't really feel comfortable adding longs here either.
Okay, I think we've covered this. Don't you? What about gold? What do you think
Let's take a look at.
we had there?
Yeah, gold looks very, very interesting here. Let's take a look. So one thing I'm looking at for gold, I'll go over back to this view right here, is the monthly chart. Monthly for gold looks fantastic. Check this out. So we've had, again, this really nice move on the geopolitical news. This monthly is really shaping up.
Yeah.
I like the way that this one looks. So this is definitely a chart that I'm very interested in. I have no position on my trading account for gold right now, but this is definitely something that's on my focus list, on my watch list. The trouble is gold has had so many fake outs. I've actually tried to trade this move a couple times to the upside. I've been stopped out every time. So this is one that definitely watching. If we can get some consolidation or tight price action here, I'd probably be more interested in actually adding a position in gold. Like, see this action right here? Yeah. Back here in December, we started getting this really tight action. And then we ended up getting that springboard to new highs right over here. I miss this move in gold. I miss this tight action. To me, this actually is a miss because this is a really good trading setup here as it gets tight. This is what I would be looking for to get long gold again. This right here, after gapping so many times, would be really tough for me to initiate a position. I think the odds of getting stopped are pretty high, but the chart looks awesome, and I would like to get a position on. Do you currently have a position in gold, Dale?
Yeah, physical and some shares.
Oh, nice.
But you know, a third. It surprised me, this rally, because we had confirmed lows. I'm waiting for weakness.
Okay. Yeah, it seems like that's kind of like the move in gold. Like if you try to buy into the strength, a lot of times, then the volatility spike comes. So yeah, like look at this gap. This thing is pretty huge. If we were to get a gap fill of this, perhaps I'd be interested. But yeah, with this conflict, who knows? Maybe gold just zips higher. And then
you have a view on yesterday was pretty negative day. I think I even saw a tweet on NVIDIA.
Oh yeah, NVIDIA. Yeah, NVIDIA.
And does that blend in with your bullish outlook on the market if NVIDIA is forming a head and shoulders top here?
Yeah, this is a big knock on the market because the best group so far this year, the XLK Mega Cap Tech, IGV Software Group, and then just the NASDAQ QQQ. And this really is the ringleader of that whole movement. So yeah, we got that bad news, the export bans of some of the NVIDIA products. And this one had a pretty bad day. So I think NVIDIA is a very, very important chart to watch. We have this wide base right here. But yeah, if we end up breaking that base and start moving to the downside, I don't really think there are other stocks that can hold up the S&P 500 the way that this one does.
Okay.
So I would imagine if I end up getting stopped out on some of my longs, it probably is because NVIDIA takes a turn for the worst. So this is definitely one of those, cautionary tales. Definitely worth watching this chart because this thing is not looking as strong as it used to.
No. All right. So let's see, Andrew.
We can go through the Bitcoin chart as well if you'd like.
Andrew, Forex Stop Hunter is the world leader in 3 drives. I can't express how much more profitable I became by mentoring with him. Oh, thank you. Bitcoin, are you a believer? We can take out the wick from the other day.
Yeah, Bitcoin. I have a long-term position in Bitcoin. I have some from 23,000, and then I actually just added at 26,000 in Bitcoin as well. So this is when I'm definitely a long-term believer in Bitcoin. And I think, to be honest, like some of these assets, like even like growth stocks or technology, Bitcoin, etc., probably the worst environment for these assets is an environment where the Fed's hiking interest rates and the Fed is reducing their balance sheet. So I think over the past 2 years, like opposite of ideal conditions for this asset. And we're seeing that this one as well. It's basing out sideways. And I think there could be some good news in the future. The GBTC ETF is very likely to get approved. And the way that I'm measuring that likelihood of approval is I'm looking at this GBTC premium and discount to NAV. Let's check this out. We pull up GBTC. And we pull up this discounter.
Do you think if the S&P, the SPY took out 420, it would pressure Bitcoin and everything?
Absolutely. Yeah, these all move together. And Bitcoin is such a high beta asset. I'd imagine Bitcoin would be down much more than the indices.
Okay. Because it really didn't do much to the upside during the period of strength last week before, until we had that news about, and then it was sold into. So I'm just
saying. So there was like a kerfuffle there where there was some news that potentially was not actual news with a BlackRock ETF approval.
Yeah.
Here's what I'm looking at.
Yeah, you have the gold up there.
Yeah, so if we go to like BITO divided by SPY, let me pull up this ratio chart. This I find very interesting. Bitcoin has been pretty relatively weak all year.
Yeah.
Well, it's had a pretty good year-to-date performance, but as you mentioned, it's had some periods of relative weakness. This is the BITO versus the SPY. And since September, when the market's done essentially like a whole lot of nothing, this relative chart, you can see Bitcoin is actually starting to move higher. So beginning in fall, we're starting to see some relative strength in Bitcoin.
Okay.
So this is when it's more of like a long-term position for me. And yeah, we'll see what happens. It's almost like a gold proxy in my eyes. Trade's a little bit different, but yeah, I really like the future for Bitcoin. And this is something I'm really thinking of holding on to for maybe like 5 or 10 years. I think at some point that money printer will end up turning back on. Interest rates will move lower, and I just want to have a core position in this
So
for if that happens.
it's a dollar hedge for you.
Exactly. Yeah.
Okay. All right.
Exactly.
Well, interesting presentation once again, Andrew. Best way for people to, follow you at Real Pristine Capital. Is that Cap?
Yep. Yeah.
Your
So we
Twitter
have our,
handle?
exactly. So we've got our Twitter right over here. And then beyond Twitter, we also have our Substack over here, which is pristinecapital.substack.com.
Why do people go to Substack to do their stuff, their analysis? Is there just the ease of getting it set up, or because I see more and more people around Substack? Why did you?
Yeah, Substack, Twitter is great for like short form, off the top of the head thoughts, if you want to put a chart out there, etc.
Yeah.
Substack is good for like if you really want to put out like a research piece or like long form content.
Got it.
So yeah, it's a good platform, very easy to get set up as well. So yeah, I really enjoy it. I put out, basically market thoughts every single night. I put out a research piece, and then I also put out like a weekend video as well. So there's a lot of good stuff.
Okay. So my trading warrior brother, Andrew O'Connell, everyone. Thank you
Thanks so
very
much,
much,
Dale.
Yeah, thanks for being here, buddy, and putting up with my irritability. I'm just, this war has me upset. So,
Oh yeah.
yeah, I'm trading to distraction, and partly sometimes I go, what's the point?
Yep.
Anyway, let's make money and do our best to guide people from not making the big mistake in this environment. Okay, bro?
Exactly. Make
All
money,
right.
stay safe. Have a good one.
You too, buddy. Thank you, Andrew. So follow Andrew. He's got, thoughtful guy and pretty calm demeanor. That's important. Unlike me. Anyway, you could join the team in about 18 minutes on the Morning Edge. And who am I wrapping it up with tomorrow? And Thursday, I know we're introducing. Oh, Mama Investor, Kim. Kim's great. So we'll be talking to her. See you guys in the room. Take it easy. Don't just count your pips, count your blessings.
Hey traders, this is Blake Morrow with Forex Analytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.